Hi, good morning everyone. My name is Ram Dhamija. Today is 27th of January and this is how the market cues are stand up for today morning. So Gift Nifty is indicating a very rough start at minus 180 points. Now, why is this happening? It's a combination of a lot of factors, but primarily it is being led by US. So US markets closed down on Friday and even today as we speak, US futures, especially Nasdaq futures are down minus 1.8%. Now, why is this happening? This is happening because of three reasons. One main reason could be that there is a threat from China that China has made their own OpenAI models, which is called DeepSeek, and that is going to disrupt the industry. So, a lot of this Nasdaq is actually rally is based on these magnificent 7 stocks. Now, if something happens to them, then the entire rally of Nasdaq goes away, and that is where the worry is coming from, that if there is a Chinese threat in terms of taking over AI race, then what is going to happen to these Nasdaq companies. So that is one of the reasons why Nasdaq looks like it is falling significantly, and it is the US Nasdaq futures are already down minus 1.7%, and that is having a ripple effect across. Because all the other cues in terms of the US are not so bad, if you ask me. The other cues are pretty benign, except for one news, which is that Mr. Trump has imposed a tariff on Colombia for 25% because of immigration issues. Colombia was not agreeing to take back their illegal immigrants. So US has put a tariff on them, and that is going to get escalated to 50%. So there is a fear that, the tariff wars just might be about to start with other countries. Colombia is not so significant, but there's a fear that it might just happen with other countries. So that is there. In terms of the other things, the US dollar index is at 107.7. It's cooled down a bit, so that's good. Brent oil is at 76 now, which is great news for us. So oil is cooling down, but then there is also pressure from not taking oil from Russian companies, etc., which is going to hurt our economy a bit. Gold is now almost inching towards all-time high. So gold is yet again proving to be a very safe asset, which is great. And as I've been saying before, that a lot of your investment should be in gold to hedge against potential other issues and other asset classes like equities and so on. Because if equities go down, then gold goes up. Now, in terms of open, where we are going to be, it looks like we are going to break 23,000 convincingly now, and that was the thing that was holding the market, 23,000 to 23,450 that I've been talking about. Now, if that goes, then there are a lot of downside targets. I wasn't expecting this kind of a move to start immediately before budget, because it's going to be very negative otherwise. But there is a big move that will come for sure. Whether it's going to come this week or next week, I'm not sure. But there's going to be a very big move either on the up or the downside. From the data, the options data, we are at a put call ratio of 0.84. So there is going to be pressure. Banknifty open interest is continuously in the 0.53 range. So that is going to exert some pressure. There were results of ICICI over the weekend. The results were good. Let us see how much will it be able to hold the markets. In terms of FII selling, they have sold 65,000 crores, which is a very big number, and it's unrelenting. They're just not stopping this month. It kind of reminds of January of 2008, when this whole crash actually started. So let's see how things pan out and what is in store. But the morning cues are looking slightly rough for our markets, and from here we will have to see how things go and whether we are able to bounce back after this initial fall of 180, 200 points, or we sink lower. So that will depend a lot on a host of factors like domestic buying coming in. But let's see how this session pans out. So that's it from me. Please have a very safe trading day, and I shall see you by the end of the day on the post market report. Bye bye.